the environment that we're in is temporary. And the beliefs that we often carry are way more permanent than the environment we're in. So if you're in an environment, you can still start challenging the
Yeah.
things you're believing are true. All right, welcome to another episode of Money Therapy, where we are trying to help people understand how to achieve, obtain, protect, maintain, and pass on wealth. Part of the issue that we run into every day is that people often get into their own way, and money is just a confusing topic. And one thing that we've learned is that oftentimes people are their own worst enemy. So we started this show, Money Therapy, to help people understand themselves in light of their finances in a totally new way, and to hopefully build a healthy relationship with money. My name is Brandon Chasteen, co-host here, Bill McGill on
What's
the other
up,
side.
everybody?
People just have some crazy beliefs or understandings about some very fundamental things.
Yeah.
And it ultimately creates barriers for them to get
Yeah.
into the wealth creation process, right? So,
Yeah.
one of the things that we wanted to talk about, what we're going to talk about today, is money misconceptions. That's going to be the
Yeah.
title of today's show. We're going to share some common misconceptions that people have, everything about working with financial planners to investing to money, different things. A few weeks ago, we did, you can go back and listen to it. Was it, we talked about the several lies. I don't remember. Was it 10 lies
Yeah, the
that
10
people
lies.
believe about money,
Yeah.
or that you believe about money? So go back and listen to that, because that will play into this episode, almost well, it'll play in very well. So
Yeah,
with that being
perfectly.
said, Bill, go ahead and tell me the conversation that you had with someone earlier this week, I believe is what you said.
Yeah.
And why don't you kick it off with a couple of the things that you caught, you picked up on, that were absolutely untrue about what he was saying, but he believed them.
Yeah.
And or maybe there's a hint of truth enough to where it's cemented in him as true, but it's keeping him from making progress.
Yeah. So this was an interesting conversation that I had because it was hard to it basically we were having a conversation, but the gist of the conversation is we were having trouble agreeing on actual definition of terms and things. And it had to do with his perception on what we do for a living as financial advisors. And it had me thinking the rest of the week, I've heard these same things that this guy said from tons of other people. And, maybe there's a lot of people out there that have these same thoughts. And so I thought the story was interesting just because it helps clear up some of it and had me thinking the rest of the week. So, kind of the biggest thing that he said, when I said that I was a financial advisor and a financial planner and help people invest their money for retirement and all those things, he basically said something to the effect of he thought that we were basically hedge fund managers, and or that we were day trading, like buying and selling multiple stocks per day to try and beat the market, if you will. He made a comment as, how I knew we were kind of off base was he said something like, he asked me basically, what did I charge to work with clients? And immediately said, I'm sure it's like 6 or 8%. And that threw me off immediately because it's nowhere near 6 to 8%. Um, and basically, as I talked to him, I said, well, there's a hedge funds operate this way. Is that what you're kind of thinking of? He's like, yeah, it's exactly it. I said, okay, well, I don't have, that's so starkly different to what we do. Um, and then I said, well, there's also day trading, which is, buying, selling multiple times a day and very active in the portfolio every single day. Is that kind of what you were talking about? And he said, yeah, absolutely. So we kind of got to an agreement on definitions, but I kind of blew up his world a little bit when I said, that's not at all what we do. What we do is completely different. And we kind of had this discussion about the differences between, let's say gambling and investing. And it made me think, well, is there truth to what he was saying and to what I was saying? What are the similarities? Basically, where does one end and where does, the other begin?
Is so this gentleman in some was making two major assumptions. He had two big misconceptions that ultimately is creating an obstacle he's placing on himself because he just doesn't fully understand. One obstacle is he made a lot of assumptions about the cost of things because he has heard about the fee structures of other platforms or other things that do exist, and
Right.
just applied that like as a large to everything. Um,
Yeah.
and then he also made an assumption that investing in the stock market is gambling. And again, both of the things that he's making assumptions about, both misconceptions, they have truth to them.
Yeah.
So he's not crazy and he's not wrong. He's
No.
just not right. So
Right.
your question is specifically like we know the fee structures. Like everybody charges different ways. People in our industry make money off of commissions, they make money off of fees, and they make money like off of like charging a percent of the assets managed.
Sure.
Everybody does it different, right? So the biggest thing that we can do is don't don't like tell yourself something. Just if you need help, go. Like what everybody should do is before you ever sign a piece of paper, a contract or a commitment or an agreement or whatever, you should understand the cost. So anybody, if you're not very clear on how they charge, if they haven't been very open about that, probably should go look for someone else. That would be my red flag.
Yeah.
But the more fun question here is, where does gambling end and investing start? And I love the thought of that. The first thing I'll say to this is many advisors, many planners miss the mark here.
Yeah.
People come and find me because they want peace of mind and security. They want um, to answer the question, how am I doing? Am I on track? Will I be okay? Right? They have concerns about conveying legacy or protecting their wealth that they've built.
Yeah. Or
Right? They
or
want to make
making
sure they're
progress.
they want to make sure they're progressing in the right manner. Am I on track? And many times, especially advisors get paid a certain way or younger advisors will say, well, hey, show me what you have in your investment accounts. It's
Yeah.
oftentimes the first question that gets asked. And what do? We respond with what they have to say, hey, you're either taking too much risk, you're not taking enough risk, but here's this investment, here's that investment. Let me try to grow your net worth, invest, invest, invest. And truthfully, they're seeking safety and we're responding with saying take risk.
Right.
So many advisors miss the mark, right? And the industry has all these fancy words to you know to your point, like we don't say gamble, we say risk or whatever the case may be. But
Speculation.
I will say, where to me, gambling, the difference is, if I go into a casino, I have to play the games that are there according to the rules set by the house.
Right.
If I play a hand of blackjack, there's a definitive like start and end to that game. If I spin a roulette wheel, there's a definitive start and end to that game. Right.
Right.
I'm told when the game is over, and odds are that I'm going to lose and the house is going to win.
Right.
When we talk about investments, doesn't matter what kind. We can talk about real estate, we can talk about crypto, we can talk about market assets, we can talk about private equity deals, we can talk whatever, it doesn't matter. I am inherently involving myself in risk. The difference is we have tools to mitigate risk. We can
Yeah.
diversify. We can do all these different things. We can dollar cost average. So I set the rules for the game I'm willing to play.
Yeah.
I take the risk according to my own risk tolerance.
Yeah.
And but the best thing that I have is there's no definitive end, right? If I buy that land, am I guaranteed to win in 3 months? Absolutely not.
Yeah.
But what are the chances? There's a great stat out there that if you make an investment and you give yourself 7 years for that investment to play out,
Yeah.
it's like a 99.9% chance that you're gonna win.
It's very
That's
good.
not gambling. That's not, you just have to have time. So you have to set the rules.
Yeah.
You have to understand that you are taking risk. You mitigate the risk where possible, and then you give yourself time. That's my differentiator there.
Yeah, and I think like in this analogy, and one of the things I tried to, convey to this person too is in our analogy with the casino and, because it's just so easy to visualize, it's almost like working with a financial advisor and or, making investments and good long-term investments yourself is kind of like being in that same casino and somebody in that casino comes to you and says, "Hey, this game over here, we made a new roulette game or this slot machine. If you play this, you actually have a 52% chance of winning. So the
Mhm.
odds are actually in your favor. What would you do?"
I completely agree with what you're saying there, but there are investments that we can make where the outcome is less certain,
Sure,
and typically because of that, the reward, the potential is higher.
sure.
Again, I think in this particular situation, the correlation that we can draw, I have clients that have too much money. They
Yeah.
know it, I know it, their families know it, right?
Hmm.
They are fine. They're never gonna run out. Their families in the future are gonna have a great, like, wealth inheritance.
Yeah.
So the risk that they need to take is minimal. I also
Yeah.
have clients that don't have enough and they have
Hmm.
goals. So by the nature of the returns we need, we are inherently willing to take more risk, right? So if that roulette table that has 52 to 48 chance that we win, but the payout is, $10, and the 48 to 52 chance that we have a 48 chance of winning, 48% chance of winning, the payout is $1,000,000. Which one are you going to play? It depends on what you're willing to risk,
Right.
right? So I think that the biggest difference is if you do your homework and you set the rules for the risk that you're willing to take, and you enter into the financial world saying, I'm only going to take calculated risk and I'm going to de-risk everywhere I possibly can.
Yeah.
One example, I have uh, m- I call it my like spicy portfolio. So for my clients where I'm managing their assets, I kind of there's kind of a scale and like the high growth, more aggressive, higher risk portfolio. I call it my spicy portfolio. Um,
Yeah.
in that, whenever clients choose to have that account, right? If
Yeah.
it's appropriate, we talk about all the risks. We talk about the time horizon. It has to be appropriate. But
Yeah.
one of the rules I set that if you're going to be in that portfolio, you have to be contributing to it on a monthly basis
Yeah.
because there will be volatility. And so
Yeah.
we set the rules to the game to say, hey, we're going to um, enter into this agreement understanding that when the markets come down this portfolio, and so we want to be having that, we want that dollar cost average effect to occur. So again, we set the rules, we set the conditions. We know that if we give it 7 years, the chances of us winning are higher, not guaranteed still, but higher.
Right.
So there's a lot of conversation. You can't go to a blackjack table in Vegas and say, "Hey, sir, I'm going to put this bet on the table, but I need these rules to be followed." They're going to be like, "No, that's not how blackjack goes, right? You play by our
Right.
rules."
Yeah. And I think that the differentiation of those terms um, is is incredibly important. And one of the things I thought about throughout this week is, expectations determines a lot of like what we think is going to happen. That directly impacts the words that we use to describe what we do with our money.
Mhm.
So, but it may not always be 100% correct. That thought's been rattling around in my head. How much do our expectations and like the reality of the situation um, incongruence with what's actually not guaranteed? That develops our terminology of investing, gambling, risk. That's what we call it speculation because, we're used to stocks always, we're used to the majority of stocks going up. And so even if you are day trading, maybe there is an expectation that you're going to make money. Otherwise, no one would get into day trading. Right. but I think it's perfectly appropriate to call it gambling, the day trading thing. Um, so anyway, that's what do you think about that? I mean, do you think our expectations have a determining factor on the terms that we use? And in this case, do you think that the terms that we use reflect our outlook and maybe even our attitudes towards what we do with our money?
Absolutely. I mean that. Yeah. I mean, if you if it, we, I mean that's what money therapy is, right? It's about the human behavior, the psychology of money, the intersection of the human being and the dollar. Math is math, right?
Yeah.
But once we internalize certain beliefs, we reinforce those beliefs with positive, negative terms, right? Like, in saying the word gambling, gambling, people get addicted to gambling.
Mm,
Gambling creates massive losses. People have lost everything because of gambling, right?
right.
Can you have a healthy gambling hobby? Is it detrimental to your health to go to Vegas once a year and take $1,000 and no, right? Like inherently in and of itself, gambling isn't the worst thing, but there is a negative connotation to that word. So
Sure.
this gentleman that wanted to use that word probably has a negative outlook on on his future if he participates. There's an interesting study Vanguard did on like the
Ma-
alpha of an advisor of a real
yeah,
life person, right?
the Magellan Fund, right?
And the interesting part of what they found was that a real life human being advisor, a planner, a manager, has about a 3% alpha, meaning they outperform like a passive investor by about 3%. Okay. But interestingly enough, of that 3%, 1.5% of that outperformance was attributed to adjusting, changing, and adapting the behaviors that we come to the table with.
I actually brought that up. It was like the reason is not the reason why financial advisors or they found that alpha is the term that we use, but the reason why it was upwards of 3% is not because of the stocks that we picked at the right time or the wrong time.
Yeah.
It's because we kept you from being you.
I think at the end of the day, yeah, I think he probably this gentleman probably used intentionally a negative word because he has a negative outlook and thinks that his outcome will be negative if he participates. And I for everybody listening, investing and gambling, I think you can gamble with investments,
Yeah.
but if you especially if you're listening to this podcast frequently, we talk about all the tools. We talk about playing the game that you want to play by the rules you want to play the game by. I talk to so many people all the time. They're like, "Brandon, I like, you know, some people just don't play by the same rules I have to play by." And it's like, no, they're playing a different game. You should get
Yeah.
in that game that they're playing. Like you just don't
Right.
even realize that you can change the game entirely.
Yeah.
Um, so I think if you just come to the table with the mindset that I'm not going to gamble, but I'm going to use all these tools to become the house. And
Yeah.
once you set the tools and you understand and you're risk appropriate and you're thinking about time horizon, you're diversifying and where possible, de-risking altogether,
Yeah.
right? Like if I'm going to take this risk, I'm going to dollar cost average. Like if I'm going to invest in this, I want to give myself 7 years to see this through.
Yeah.
Um, then you're not assuring anything. There is no promises, so there is risk still,
Sure.
but you're not playing the same roulette game at the Vegas casino.
Yeah. And as we're like in this thought of, kind of debunking misconceptions, if we will, the turning point of this conversation, what was interesting about it is, he did use, like I said, he was kind of, well, you guys are basically just gambling, right? And there was a little bit of a negative connotation to that. And the way that I kind of combated that without being defensive, and the inclination was, I kind of wanted to be defensive, but I internally was like, don't be defensive. But I basically came back at him with a little bit of pessimism myself and a little bit of like a harsh truth, and a misconception of what we do. And, the part that made his eyebrows kind of raise up and him kind of change his demeanor to a more positive outlook and almost with his body language was like, "Huh, I never thought of it that way." We've all had those moments in conversation. Um, it was when I said, I tell clients all the time that I'm going to make you way more money than, preventing you from making a major money mistake than probably I ever will investing at the right stock at the right time and
Mhm.
trying to beat the market. Almost certainly. And I told him a story of a client that I had who wanted to cash out everything at the bottom of March of 2020 during the pandemic. And I talked him down from the ledge. I was like, no, we're not. Everything in my head and everything that we study tells us that's the worst possible thing to do. But
Yeah.
you're dealing with people and emotions and things. And I talked him off the ledge and said, let's not do this. Please don't do this. Let's take a couple of days and come back to the table and talk about it. And just that, like 3 or 4 days, when we came back, the tone was completely different. The outlook was completely different. And we wound up just not doing anything. We
Yeah.
didn't we didn't do anything. We didn't buy more. We just, hey, let's just sit here for a minute. And that ended up to this day being multiple hundreds of thousands of dollars. Like they would have, I mean, it almost to this day has doubled their retirement assets
Hmm.
because we didn't do a thing. And I,
Yeah.
I told this gentleman that, that story. And I said, dude, I may charge X percent, but I just paid for myself for the next like 30 lifetimes from just getting somebody to not do something they shouldn't have done. Yeah. Anyway, kind of off on a tangent, but it was just a super interesting conversation. And he kind of came around at the end. And it was really good because it was like,
So
you
I
have
think
your,
in sum, to summarize, to differentiate gambling from investing is I have tools, I have resources, I can play my own game, set my
yeah,
own rules,
yeah,
and stack the odds in my favor heavily
yeah.
as long as I'm being, and I can also de-risk, right? I can take risk off the table when I choose. So
Yeah,
um I think that
absolutely.
differentiates that. So a couple other misconceptions that we can talk about really quick.
Yeah,
Let's keep it quick because I got a few. Uh, Bill, is financial planning only for the wealthy?
incorrect.
Incorrect, right? And I hear
It's
that
a
all the time. Like
it's laughable.
people come to me all the time and they're just like, Brandon, I don't have that much. I'm like, you have everything you've worked hard to, like, it means so much to you because
Yeah,
you have worked hard to get what you have. I hate the misconception that I I'm only willing to help wealthy people because it's absolutely wrong. And it's
yeah,
something the industry reinforces, but I take that almost as an insult because I care so much about people, and whatever they do have is significant. It generally usually represents a huge part of their life that they've
yeah,
given everything for. So
yeah,
financial planning is for everyone. Everyone is trying to move the needle to a better place in life. They're
yeah,
trying to advance their families. They're thinking about not legacy just in the terms of wealth, but how do I transfer like vision and values and all these other attributes? How do I pass on heritage? All these things are part of financial planning. It is for
w
everyone,
and
and
also, real quick, I mean, the data tells us that the wealthy people today started exactly where those people we were talking about today. They started exactly at that point, which means anyone can do it.
yeah, I kind of in that same vein. Sometimes people get really discouraged because uh, growing wealth is like I hear the question all the time, like Brandon, I don't even know where to start. Right? It's too
Yeah,
complicated. It's too complex. There's too much. My brain can't like where I
hear it
don't even
all
know
the
where to get
time.
started.
Yeah,
The misconception is that it's too complicated, and in fact, once you have a roadmap in front of you, it's not. It's hard work, but it's not complicated work,
true.
right? Like at the
Yeah,
end of the day, the very, very strategic game of football all boils down to blocking and tackling, right? like
Yeah.
you can see math equations that are,
Football
a
people are gonna have a
full
cow that we said that.
uh, I think they'll agree in a lot of ways. You can have a whiteboard full of like this huge, super, super long math equation, but guess what? Typically, math equations are multiplication, addition, subtraction, division. Said that in a weird order. Um, but I don't think it's hard work. It's not complicated work.
Yeah,
Um, what else? I think those are common misconceptions preventing people from getting started. People talk about being too young. People talk. They just like. I feel like there's so many times people are creating. Like they're putting just one more barrier in front
yeah.
of themselves from
Mhm.
getting started. And I would just, if we're going to talk about money therapy, if we're going to talk about the human behavior, if we're going to talk about how sometimes we're our own worst enemies, we got to be willing to admit, like, maybe the beliefs that I have are just entirely wrong. I would say, like,
Yeah,
start by listening to the 10 lies you believe about money. And
yeah,
the actionable step here is to just start saying, what if I'm wrong? What if
yeah,
the guy that you were talking to would have just been like, investing is no better than gambling. And then what if he just paused for a second and was like, what if I'm wrong? What if
yeah,
investing isn't gambling? Right?
yeah.
I'm not wealthy
Mindset
enough
is
to work with
everything.
I'm not wealthy enough to work with a financial planner.
Yeah,
But what if I have enough? What if I can work with a financial planner? So I think in
yeah,
everything that we do, if we just start saying, if there's this cool, like, law of opposites, two sides of the stick, there's duality, there's all these things that suggest like there's a positive and negative side, there's a plus and minus, in almost everything. So if one thing's true, the other thing needs to be true as well, right? So is investing gambling? If that is true, then investing is not gambling, right? Anyway, it's a really weird way of just saying, start challenging your own
you're getting
beliefs.
stoic on us, dude. You're you're
Start
dropping
challenging your own beliefs
stoicism.
and just say, like, if I believe this is true, what if the opposite is true? And then once you really convince yourself that maybe there is more truth than what you understand, because we're all brought up. I'm working on a book right now, and inside this book, I talk a lot about this. It's just like all these things that I've been through in my life have formed beliefs. And when you're young and you're coming to age, like, you just let your circumstances tell you so much about who you are. The reality is we're way bigger than our circumstances. We're way more than our circumstances. And we got to start challenging that. So now I when I have these thoughts about money, I'm like,
Yeah.
that doesn't have to be true at all. I'm playing a
Again,
game that I don't have to play.
yeah, so mindset, like, how do I get the game to go in my favor? Keep an open mind, and then also your environment. There's a huge study where they had this test, and they tested all kinds of people, and one version of the test had words that were associated with old, and
Mm,
the other version was words associated with young, and then they timed everybody walking back to the elevators after the test, and everybody who took the young test was faster going back to the elevators than the people who took the old test, and they didn't know that they were doing it. So change your environment. If you find
mhm.
yourself in that spot of believing one thing and you want to challenge yourself, get out of the environment, get a coach, get a financial advisor to say, hey, this is how I handle my money. This is how I think about money. Am I correct? Should I be thinking
Yeah.
about it a different way? Should I be changing habits?
I would just
That's
say,
huge.
like, there are people that are going to be listening to this, and I'm probably it's true for me and you right now too. You can't always just change your environment,
Yeah,
right? Like, and also some of the things I believe about money are because of an environment that I was in when I was a child,
sure.
right? And I can't, like, now I'm no longer in that environment, but they made their impression. They dug their trenches, like, these memories, beliefs, circumstances, these things that I went through, they 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 grabbed on, they made roots, right? Like, they're in me. And so sometimes what we do need to understand is the environment that we in. maybe we can't get out of it right now. Maybe we can't change it right now, but the environment that we're in is temporary. And the beliefs that we often carry are way more permanent than the environment we're in. So if you're in an environment, you can still start challenging the
Yeah.
things you're believing are true.
And your perspective has a huge capacity to form your environment. So
Yes.
I think we should do a whole podcast episode on how to change your environment when it comes to personal finance. I think that'd be really helpful to people.
Again, challenge your beliefs from the environment you're in because sometimes you can't change your environment.
Well,
But
that's something we can debate later, Brandon.
you can also buy my book whenever it finally gets done one day.
Dude, we're gonna do a whole podcast where I interview you like you're on a media tour, and it's gonna be awesome. I'm gonna have so many questions. And it's my
It's gonna
interview, by the way. It's mine.
it's gonna
So
be a good book.
I'm gonna be answering the question or asking the questions, and
Yeah.
I will demand answers. It's gonna be great.
If you're listening to this and you have a belief about money, um, my invitation to you is to reach out. You know, tell me your beliefs. Let's see if we can challenge them. I'll be honest with you if I think there is truth to it, or if there's opposite truths that might exist as well. My job, what I believe, like I'm not here to be critical or to tell people, hey, you're dumb or misinformed, or even tell people they're wrong. My job is to say, okay, if that's true, what also could be true? Are we believing this is our only truth because of something we went through, something we saw?
Right.
Or, like it's just about starting to ask a question. And I think that's the tool. Like we're all not good enough at it. We all have it inside us. I can sit
Yeah.
there and have a judgment and be like, why did I feel that way? And if I felt that way, what other way could I have felt? If I'm afraid of something, why am I afraid of this? And I'm afraid if I'm afraid of this, could there be another way to feel or another way to look at this where I'm less afraid, more empowered? Um,
Well,
that's
Brandon, how
that's
what's the best
I
way
was
to get a hold of us if you got these questions? Where should they go?
um
Tell the people where they should go.
Yeah, I would definitely reach out to us, our office phone numbers. You can go to harpethwealthpartners.com, check out the website, and our contact information is on the website. Our emails are on our website. You can also just go into the notes on the show and respond, reach out to us that way. There's probably like 1 million ways you could show up at my office, and I'll talk to you there. There's a lot of ways to get in touch with us, but I would say, the easiest is probably just shoot us an email, because we'll respond to you, and we won't be mean. And we don't charge 8% to respond to a question, or maybe we do. 8% of nothing is what? Nothing. So
Yeah.
uh,
There we
yeah,
go.
that's what we got. Again, money misconceptions. You are your own worst enemy. Don't rule yourself or out. Don't keep yourself away from getting the help that could potentially change your life. Um, open the door of your mind. Like, just reach out and say, hey, this is what I believe. Tell me I'm wrong, and be willing
Yeah.
to hear, learn, and grow.
Couldn't have said it better myself.
Cool.
Guys, go to Spotify. We're trying to grow that as best we can. So look us up on Spotify and give us a follow, a like, and a 5-star review, if you will. And we'll see y'all next week.
Thanks, everybody.
Adios.
We hope you learned something valuable today. We appreciate you including us in your journey towards financial betterment. It is important to us that you know this is for educational purposes only and not to be considered specific advice for any individual listener. If something we discussed is relevant to you and you have questions about how it might be uniquely applicable to you, please discuss that with a financial professional, or, of course, we are happy to have further conversations with you about your specific questions, needs, or circumstances. We welcome you to reach out to us via our website, harpethwealthpartners.com, or by emailing Brandon at bmc@harpethwealthpartners.com. Securities are offered through LPL Financial, member FINRA SIPC. Investment advice is offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and Harpeth Wealth Partners are separate entities from LPL Financial. The opinions voiced in this material are for general information only and are not to be intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult appropriate qualified professionals prior to making a decision. Investing includes risk, including fluctuating prices and loss of principal. No strategy assures success or protects against loss. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Hypothetical examples presented are not representative of any specific investments. Your results may vary. We want to thank you for your time, and we look forward to having you back next week.